This is May 2nd, 2025. This is an Ask Slim live event. This is trade planning with Slim's analyst team. Got myself, Matt, Arvi, and Katie here today. First, we'll just go through our upcoming Ask Slim Market Week and live event schedule. Today is May 2nd, and we're doing a trade planning live session. Next week, we'll have a recorded Market Week show from Slim. And the 16th, we'll have a Market Week live show that will be with the full analyst team, including Slim. And then on the 23rd, we'll be back with a recorded Market Week show from Slim. And then, that would be supposed to be May 30th. We will be back with a live event. So that's May 30th on that one. That's our look for the schedule for May. As we always have to indicate here, all the information on AskSlim.com and all of our content platforms is for informational and educational purposes only and should not be construed as investment or trading advice. Our hosts today, we have myself, Arvi, and Katie. We are Slim's proteges. We make up the analyst team along with Slim. If you'd like to learn more about us, you can go to AskSlim.com, about Ask Slim, and check our video interviews that we did with each other in the Meet the Team area. Today's agenda, as it was announced in the email, we're going to do a member Q&A. So the team here will look at the symbols that you are requesting, and we'll put the Ask Slim methodology to use. We'll apply it for trade planning purposes, and we'll walk through the cycle analysis, momentum conditions, the fib swing high, swing low techniques, which helps us to generate the fundamental technical evidence needed for trade planning. Our current promotion is the cycle analysis workshop. This ends on this Sunday, so I'll give a quick brief review of that and our overall services for those of you that are unfamiliar with what we offer. Then the next section we're going to talk about the analysis, technical outlook, near term, short term for the SPY. And then Katie's going to illustrate how to leverage those technical insights into selecting option strategy. So we'll have some good dialogue around the analysis, and the analyst team will chat about that, and then Katie will put together some option strategies. And then we're going to finish with the cycle timing tracker. So Katie's going to do a deep dive into the cycle timing tracker, how to utilize it effectively, specifically for your timing and planning around directional decisions as you filter for bullish and bearish setups. The cycle timing tracker can be a great companion tool for that process. All right. So we're going to get started here with our member chart requests and questions with the analyst team. So feel free to put some symbols into the Q&A, and we will start our review based on those symbols that we have. If it's symbols that we don't have, then we might be able to take a look at them. We'll let you know, though. All right, looks like we have a few in here coming in. Deere, Microsoft, so far. GDX.
Yeah, so a bunch of those I have PLTR, I have VIX.
Okay,
Tesla. Great. Katie, you can take that one.
Yeah, I've got Tesla.
Let us know if anything else pops up. But shall we go ahead and share our screen, Matt?
Yeah, let's go ahead.
Okay, cool. All right, I'll go ahead and start, and I'll hand it off to you, Katie.
Okay.
All right, so we're first going to look at PLTR. Let me pull it up on my screen, and then I'll share. Obviously, PLTR has had just a huge move off of the trough, so I need to just give 1 second while we have to update some of these charts, because the lows all formed on the weekly and daily right on time, but the magnitude of the move has just been tremendous. So let's find that on Zoom. How to share the screen here. Okay, so you should see both a weekly and daily cycle analysis chart for PLTR. Okay, so this has definitely been one of the leaders on the upside off of this trough. What we're seeing on the intermediate term is there was a low that was due right here. You can see it, it formed, it sold off right into it, turned back up. RS on the weekly curled up right here. on 414. Interesting, right? Why are we seeing that curl up? It's saying that you have, in all likelihood, seen a low form, and this has now moved back, almost back towards that old high at 125.41. If we draw in our fibs from cycle low, cycle high to the cycle low, see these are our anchors right here, cycle low, cycle high to the cycle low. What are our levels up? We have 128.13 and 145. 145 is certainly in play here, still in PLTR. Why are we saying that? Well, we are still very early in this new rising phase. We would be looking for overall a series of higher highs and higher lows here as this looks still higher. Please note it does seem like there is earnings coming up here. As always, please use other sources, but it says in early May there is earnings. So please just keep that on your radar. But this is a green rising track here in PLTR. Simply means that it is in play here to the upside on the intermediate term. So we're going to show that as green just to do this live for you here. Okay, with that as the upside zone from 145 up to the up to the 166 area, which is the 161.8 fib. Okay, so those are the areas that we'll be looking for. We will draw two tracks here so you can see how this is drawn out like that, showing you what we are looking for on the upside. If we shift over now to the short term action, very, very strong. You will see that this formed a little A, B, C down into the trough. Very interesting to see that. And then look at what we had here. Just hide the drawings for a second. A little basing period right here, inverted head and shoulders. That is very classic. And then the breakout to the upside. So what is the measured move for that head and shoulders? We'll add in the 200% level to get the measured move, and that's about 132. So very high odds of a move up towards that area, at least here on the upside in the short term. Obviously, as it says here, there is earnings. But we would look for this rising area here to be holding on the upside and a move back into that 132-ish area in the short term. That's right on 113 to 103 or so on the trend. If we now pop over to the next one, we'll see MSFT. MSFT, very strong move off of the low, which was due and did form on time. Very important to highlight that. Formed right here, curled its way up. RS curled up, so very interesting. And obviously on earnings, a sharp move higher all the way through the 78.6 at 432, 450, 650, and then this old high at 468. 468 is very likely at this point. Why are we saying that? Why? Because if we just hide the drawings for a second, this is a range. Oops, my tool gets a little bit buggy there, but you can see we actually failed on the downside, and we'd be looking for it to move back to the upper end of range now, back at those old highs. So that's really what we are looking for here in Microsoft on the intermediate term. On the short term, very bullish action. It has run a long ways, but keep your eyes on this very high volume on this move up. Watch for a little flag here to then set up another move back to the upside. Very strong pattern in Microsoft. And I'll also look at, okay, there's a bunch of others that showed up here. Katie, I don't know if you have them. Please just let me know. But
Most of them not.
Okay.
See, didn't we? I might have Kroger.
Yeah, I'll go ahead and pull up the VIX. So nothing has really changed in the VIX. As I said on Wednesday, I'm looking for this to kind of get a little bit choppy here for a while and really see that surge up or move up really in the VIX starting around the end of May, early part of June time period. So this is selling off, right? Really where it should be, right? We're seeing a sharp move down in here, and we'll be still looking for that to continue for a bit longer. If we pop over to the short term, there is a low that is due shortly here, but I'm not looking for it to really go all that far here on the upside, really chop around and then see another move down into that trough again, right around that end of May, early June, and then look for it to turn up after that. But right now, the overall bias, as we're seeing here in IVs, is firm down. Let me see which of these charts I have. So we'll pull up / BTC. I don't know if we have this updated yet, but you can see what's happening here. We got into this new rising mode, 78.6, very likely at around the 1026 area. We'll be looking for that to actually move over time through that area and then move back to the old all-time high at 110.1. Pop over to the short term. Bullish action, rising trend that is in place. Watch for only small dips. Sorry about that. Only small dips, and then just to curl its way right back up to the upside. Very strong action in BTC. And look at how this low formed. Just hide the drawings for a second. A clear W bottom, W base, right? Look at this. This is so classic, so this is exactly what you want to see off of a low. And then where was the actual trigger? I highlighted this live for all of our traders right there as it moved back through the old highs. That was the trigger, and you've seen a clean move with zero heat since that point. If we pop over to, I think I have GLD. Well,
SMH and SMH.
you saw SMH, yeah. I can look at that one. Pull up semis. Semis are in a new rising mode. Again, I haven't had all this updated yet, but we are forming our trough right here. You can see it with a little higher low setup. Now we've seen a curl up here in the RS on the weekly, really confirming that we're in that new rising mode. So we have to only be looking at higher levels. 61.8 at around 261 is in play, and the 78.6 is up there at 248.36. Pop over to the short term. Very bullish, higher low base that is forming here. So what is the highest odds? The highest odds would be to only see small pullbacks here. Oh, my cursor is no longer working, but only small moves down and then moves right back to the upside. Let me see if I can get that cursor back. Unfortunately, on this system, it's a little bit buggy. Just small pullbacks and then moves right back to the upside. That's really what we will be looking at here in the SMH. Very, very strong action. Okay. And I'm going to go ahead and hand this off to you, Katie.
Okay, I'm going to take a look at Tesla, Kroger, and the weekly chart of AEM. Let's look at my chart. Can you see it?
Yep. All
All
good.
right. Okay, so here is the weekly chart of Tesla. Notice that we are inside the weekly cycle timing window. This did have an adjustment of the weekly cycle. We're down to 26 bars, and we are in bottom pending status. Probably next week we'll move into bottom confirmed status based on this move off of this low and the improvement in momentum. Because this retraced so deeply, gave back all of this cycle, I have this projected up into this resistance zone in the weekly time frame. The top of this is at about 384 and the bottom is at about 320. So that is our target range. And if we switch over to the daily chart, this was a little bit of a short cycle here. We've moved up and we are testing the prior cycle peak right here. That was right around 292. I've got this projected up to the next level up, which is the 127.2% extension level. That level is at about 309.43. This next cycle is due to have a trough at the end of May. So this is looking good. I can tell you, however, that we do have negative momentum over here on the monthly chart. So it'll be interesting to see if that can we can get enough positive price action in this time frame to shift that monthly momentum up. The next one that I'm going to look at is Kroger. This is the weekly chart. You can see we've tagged this 100% extension level at 72.67. We do have positive momentum. This is a 27 bar cycle. We're not expecting the trough to form until later in the summer, mid-June to the end of July. Based on that positive momentum, let's see if we can put in a higher level, which would be the 127.2% level up here. And that would be up at 76.63. That is definitely a possibility. We would switch this up here and change that to the 127.2. That would definitely be the next target zone up. Over on the daily chart, These are relatively long cycles, 48 bars. We have another daily trough due in June. So we're up here by the 78.6% extension level. Obviously, these supports need to be raised since they are off of this level right here. We would expect perhaps a bit higher. Let's see if we can put in another extension level here. That would be up around 74.5, and then possibly curling down for a move into this timing window in June, and then another attempt at the highs before moving down into this synced trough with the weekly cycle timing window. Right now, this is showing positive momentum across the board. Reversal scout is positive, and also the slim ribbon is positive. And then the last one that I was going to take a look at is one of the gold mining stocks. I only have the weekly updated here. This has a dominant cycle on the weekly time frame of 45 bars, and that is broken into harmonic families, minor thirds of 15 bars each. You can see these minor cycles. Here's the first one. Here is the second one. And now the third one, and we're starting to move down into this weekly cycle timing window that runs from the end of May until beginning of July. So we have our support levels here, 104.97 on the top, 91.51 on the bottom. And if the support zone holds during this retracement, then that would be a buy zone for another move to at least retest this high and possibly higher. Momentum is still positive. We'd expect to see that start to curl over. All right, those are mine. Matt, did you want to do any levels?
Sure, yeah, I'll take a look at a couple of the other ones that were requested. Shashi, you had asked for fib level targets for Microsoft. I can start on those. Did you have a specific outlook period in mind? Was it an intraday look, a short-term look, intermediate or longer term? I'll start with more of a longer term, intermediate look here. Long term. Okay. So let me just share my screen. Okay. We should see the Microsoft chart.
Yep.
Okay, great.
Oh, good.
All right. So what we have to do here is, go pretty far back here to find some good anchor points. And I'm going to do a couple draws. I'm going to start with this major low that is from October, the October end of the bear market, and use that as an anchor, because Shashi asked for a long-term outlook. So that would then suggest you're looking at a multiple month, or even it could be, a couple year outlook. And so I'm going to start with that swing low. I'm going to go all the way up to that peak, and I'm going to go to this recent key panic low that we had in early April, and that will be our main draw. And the reason that this is a main draw and a focus is because now that we have, as the team went through, we have a confirmation of a cycle low, and we also have a new confirmation of a positive cycle breakout. And if we close today above this intermediate 78.6, then that suggests that these levels are now in play until this pattern would be neutralized or would shift negative. So from a long-term perspective, what's in play based on this pattern structure, this longer-term pattern structure, is going to be around 502. You can call it 500, all the way up to this 545 area those would be the key levels on the upside, unless this pattern is shifted. And to shift that pattern, the first warning for me would be, get this fib retracement. So I'm going to use my fib retracement tool, and I would need to see a weekly close below 380, which would neutralize this current positive pattern, and then a weekly close below this let's call it 363, which would then warn that it is shifting negative. Until that happens, this will stay in play. So that's what we have on the longer term outlook. If I do one more draw as more of a conservative approach using this major swing low here from October or late September of 2023, see if I can find any confluences. So there's likely to be some resistance into the 61.8 to 78.6 here. We may get a pullback, maybe into that minor weekly cycle timing, and then a rally. And you can see here that there's a confluence with the 61.8 and 100%. So I would expect this to be a magnet number and that this gets tested sometime out into the middle of summer or even late August period. If not, it may take a few more months, but this would be the longer term outlook. So these would be the initial targets. We're coming up upon one right now, but then you get into retesting that high, and then the optimal target is here around 503. So that's what we have for the projections in Microsoft. And then there was just a couple other, there was a request for IWM. Michael, was there an outlook period that you had in mind for IWM? That'd be helpful. And then also there was a request for ZBRA, Zebra, if there's an outlook period on there. And I'm just going to quickly run through those without, well, IWM I'll do with our cycle analysis, and the other ones I would do just using our chart streams grid. Mike is looking for short-term and intermediate. Mike, I'm going to give you the short-term right now. Okay, so let's look at the short-term for IWM. First things we want to look, so I'm on the daily chart, and I'm going to look at the cycle structure for and translation of the current conditions for IWM. And to do that, I'm going to zoom out a little bit here so we can see these key swing highs. I'll start with this one here. We have a cycle peak, so we'll do our draw from the cycle peak to our trough. And then the key levels that are lines in the sand in terms of pattern changes or bias changes is our 61.8 and our 78.6. So once we had this close above that 61.8 on a daily basis, that neutralized that technical damage that we had, and that opened the door to the next levels on the upside. And so when that happens and you get a pullback within the confines of a positive reversal scout, that gives a short-term trader or near-term trader an opportunity to pay attention to alongside opportunity. And we saw a nice bounce off that pullback to the breakout above that 50%. And now we're accelerating into a minor fib extension zone. So our overall bias is positive right now, especially since that we're likely to test or break out above the 78.6. We've made multiple higher highs here over the course of this daily cycle, with the first rising phase here, a pullback that did not make a lower low, came into the short-term support zone, broke out above it, rallied into about the middle of this key resistance zone, pulled back, and now have pushed back above. So at this point, this cycle structure is going to translate positively. That would then suggest that a pullback that we would have is likely to be bought, and then that we would rally again. So over the next 1 to 3 weeks, the path of least resistance is going to be to the upside. And what could that look like in terms of levels? Well, I'm going to do a draw from the cycle low all the way up to this minor high here, back down to this near-term swing low. And that's going to give me 61.8 to 78.6. So this 206 to about 211 is what I see over the next 1 to 3 weeks. And I want to also see if we have any confluences that are happening with a higher level draw. I'll zoom in here. Okay, so that fits nicely. So from that higher level anchor down to the April panic low, you can see that there's a 61.8 that retracement level that fits in between the 61.8 fib extension and 78% fib extension. So this is a key area here where I would expect the market to want to get into, and then there's likely to be some reaction in there. This could be where the cycle peak forms off this daily cycle, somewhere in this zone here. Then we could get a pullback. Typical pullbacks go into when you have very strong trending markets, you'll get to a 23.6, but normally it's a 38.2 to 50%. You'd watch for that next swing low. If we don't get a close below that 61.8, then the upside levels here that I have shown will stay in play. The key swing low to watch for these projections also to stay valid would be here around 190, let's call it 50. So if that gets violated, then the projections have to be reevaluated. But from a bias perspective, there's a lot of work now that has to be done on the downside to change this pattern. And for me, that would be a daily close below about 182.65 would neutralize the current positive overall cycle structure. So that's the short-term look, which I'm going to do on IWM. And I think that'll be it for our current review of symbols. If you have other symbols and you are level 1 through or level 2 through 4 members, feel free to connect with us, and we'll see if there's something we can do in a near-term video or maybe even on Discord. All right, great work, team. We'll move on to the next segment, unless Katie or Arvi, you saw anything else that we needed to cover.
No, I think we're all good, Matt.
Okay. All right, let me pull back over. Microsoft. Okay, so up next is going to be a quick review of our technical analysis services and the current promotion that is running. Let me just pull that over for us to look at. So for those of you that aren't familiar with Ask Slim, most of you probably are who are on this webinar, but I'm just going to give you the quick high-level overview. We are a technical analysis firm. We specialize in providing a combination of cycle analysis, momentum studies, and Fibonacci swing high, swing low techniques. With that, we deliver, we have 4 membership levels, and those range from a level 1, 2, 3, 4. And then we also have a standalone day trader service for those of you that are intraday traders. How it works is essentially, as you go higher in our membership levels, you get more coverage. So we'll expand the universe of symbols that we're covering. So basically in level 1, you're going to get a great introduction to the methodology and a deep dive into the indexes. So you'll have daily information that's provided on the S&P 500, on the NASDAQ 100 and the Russell 2000, along with an introduction into our momentum studies that we use for the longer term with our momentum tracker. And then as you move on into level 2, 3, and 4, as I said, the coverage increases, and then also the ability to use our tools grows. So in level 3, you will get access to our live chart streams where you can see analysis on 11 key symbols, including the indexes, the index ETFs, silver, gold, and XLE, TLT. So we cover those, and you can watch those live throughout the market session. And then I'll just give you a quick peek of what that would look like. So for example, on the SPY, you would be able to see this chart and it would be live, and you'd be able to watch that throughout the market session. And we have that on 11 key symbols. And then in level 4, you get to access all of the focus list symbols that we cover. And with many of those, you will get monthly, weekly, and daily cycle analysis. So that's really, really important if you want to stay in very close connection with the work that we're doing and have the ability to actually open up that work on your own charts. So what you saw us doing in that last segment with those symbols, those charts are what you'd be able to view on your own Thinkorswim platform, as well as be able to import our studies. So our custom studies that we've created, you'd be able to import those onto your own Thinkorswim platform. So yes, with level 4, you do have to have the Thinkorswim platform. Also, level 4 is going to give you access to our pro market conditions monitor. If you have more questions on any of these, you can feel free to reach out to me at matt@askslim.com. If you have an interest in level 4, I do from time to time live demos, sometimes group demos. So if you have an interest in that, feel free to reach out. All right. Up next here is the cycle analysis workshop. So very quickly here, this is now available, or I should say this is ending. It has been available for a few weeks. And the special offer that we have where you can save $400 on this workshop, which is regularly priced at $12.97, will be ending on this Sunday. Also, if you're a level 3 or 4 member, you can write to me and get an additional $100 off. So you'd save $500. This is essentially the ability to have access to Slim's life's work in some respects. He spent over 2 years putting this together. It took him over 6 months to produce. There's over 26 modules. I will show those very quickly here. We'll move on to the next segment. But there's over 26 modules that are available through the cycle analysis workshop. The entire workshop is prepared and taught by Slim. These are videos that you would have 24/7 access to. If you purchase the workshop, you can access it anywhere that you have an internet connection and can get onto your Ask Slim account. And you can see all the various modules here. So this is a complete, I would call it, technical analysis library with a focus on cycle analysis, and really will give you the framework for which we do all of our work off of. In addition to that, we've added in here a lot of what we call tools for tech videos that have association with these different modules. So there's about, I would say, over 15 of those that are available. And when you, let's see if I can find one of them here. Yeah, so when you see the additional resources, that's what I'm talking about in terms of associating additional videos that Slim has produced with these modules. And so we have organized those into the workshop. Furthermore, there are these addendums down here. So the analyst team here has produced additional addendums, and then Slim has also created additional addendums, which we've added in to the cycle analysis workshop, giving it increased value beyond what we already had there before. And those also are coming from Slim's behind the curtain workshops that he does, where he spends almost 3 hours and you get to hear him think out loud as he would walk through his analysis on the futures markets and the indexes. So this is a huge, comprehensive technical library focused on the Ask Slim methodology and giving you that framework, again, taught by Slim, and you would have 24/7 access to this workshop. It does not expire. Okay, now we're going to move on to the next segment here. So we're going to do translating technical analysis into option strategy selection. I'm going to share some analysis, short-term, near-term analysis on the SPY, and then we're going to talk with Katie on how we can leverage those technical insights into option strategy selection. Let me just grab the SPY charts here. So this is the SPY charts, weekly, daily, 2-hour, 15-minute. And what I'm really focused on here will be determining directional bias, starting from left to right, and then also moving into what are the key targets on the upside, where are those levels where that analysis would change, and then putting all that together so that we can come up with some option strategies. If there are any that are optimal right now is another question, because sometimes you look at a chart and you might say, you know what, this isn't optimal. If that's the case, then you might reduce that position size. Or if you feel that you're in the midst of a move, which we are right now, again, that might be something where you reduce the position size because you don't have that optimal setup that you might be looking for. But we're going to talk that through. Okay, so on the left here is our weekly chart, and you can see that the reversal scout has turned up. Again, that was what is confirming that we had an intermediate cycle low in place. If this wasn't an intermediate cycle low, there would have been very high odds that we wouldn't have got that turn up, that we would have failed much earlier and rolled back over. As you can see now, we pushed through that 50%, and this week, we're pushing through the 61.8 and closing well above it. So that's what is forcing the analysis to be reviewed and suggest that what we saw in April was that intermediate time frame low. Now moving over to the daily chart. From a short-term perspective, what are we looking at? Well, we have a overall positive bias happening here. We pushed through the short-term 78.6. We closed above it. That shifted and confirmed that positive cycle structure. So with that said, as you evaluate, what kind of opportunity might I have, then you have to look at your key levels. So as I did these draws, and I'll do them again here just so we can get a sense of what we're looking at in terms of opportunity on the upside still. There was 3 projection zones that were in play. Yesterday, we satisfied the first one. So you would have most likely, if you're a near-term or short-term trader, you would have looked to enter your trade when the swing low here formed in the key short-term support zone. And then we got a turn up, you can see here in the 2-hour reversal scout as well as the slim ribbon. That would have been the optimal initial entry. Okay, well, we're not there now. So we're now further along into the move, but there is still some room on the upside. So this makes it more challenging to come up with, an optimal option strategies, but we're gonna think those out together as we finish this analysis here. So on the upside, the target zone number 2 or in-play projection zone number 2 really runs from about this 571 to about, let's call it 580-ish here is where that other projection zone would be. I'll pull this back a little bit. And so this is the optimal one that we would be considering, Katie, if we're looking at a trade. And again, we're talking about near-term and short-term outlooks. And so the near-term, when we talk about near-term, we're looking at something that could be as quick as 1 day or as long as about a week. And then when we talk about short-term, we're looking at the next 1 to 3 weeks as an outlook. So what we're looking at here is we're in the midst of a breakout. This is the first projection zone. It's very possible we get into this zone, then there's a reaction in that zone that could get us a pullback into the slim ribbon again. And then that would, the translation for this cycle structure is going to be positive. It's going to be a right-hand translation. That suggests that there's likely to be a more shallow pullback. And then as we get that shallow pullback, what we would want to do is look for the reversal scout in the 2-hour to turn back up. And then that could suggest we would get our next move into this third projection zone. As long as we don't violate this swing low, those projections will stay in play. Just from an interest in where might we peak? Well, this is rising, but right now, what I usually like to watch for is a close below this, the bottom of the slim ribbon, a daily close below it with the reversal scout turning over. That is typically a strong warning sign of a daily peak as we get out into this later peaking time frame and we start hitting the key fib projection. So we hit the first projection and we're on our way to that second one. All right, Katie, why don't you jump in and let's think out what we might be able to put together here in terms of an option strategy or two.
Okay, let's take a look at Tasty Trade. We use them as our preferred options trading platform. Here is the available expiration cycles in the SPY. I always start by taking a look at the IV rank. Today it's 26.5 at this moment, and so that's relatively low. Now, Matt mentioned like a 1 week time frame that would take us out to about May 12th because we're at the end of this week right now. So also what we're talking about here is a brief, correct me if I'm wrong, Matt, a brief move up to certain price levels that he has identified. And then the possibility of a reaction, a retracement from those levels. So what we're talking about there is delta. And what we want is to have as many deltas as we can afford, because that will help us take advantage of a price move to the upside or the downside if we were doing puts. In this case, we're talking bullish. And we want to have less extrinsic value. So on the Tasty Trade platform, I have deltas in this column and this column, and here's the extrinsic value. So you can see that the deltas increase as you go up, and the extrinsic value increases as you go down closer to at the money. So I like to start at least around the 70 delta. And in this case, what I would probably do, because we're talking almost like a scalp, expecting a brief move to the upside, take your profits because you're expecting the reaction back down. So if we were to buy the 558, which is the 70 delta call, that costs us $1,375 to purchase. Now that sounds expensive. We don't want to necessarily hold this to expiration. We just want to hit a price target and take our profits for whatever they are and close the trade. Let's take a look at the risk graph here. I have some other trades that I want to get out of there. So here's the risk graph of the long call. And what you can see is that your max loss is limited to the debit that you will pay. Now, if you do not get a move to the upside, or you get a move to the downside instead, obviously you will very quickly show a loss. If you do get that move up, then you will be able to take your trade off for a profit very quickly. Let me just zoom in here. So the target zone was up to about 571 to 580. And so 571 is not going to give you very much of a profit, but 580, if you got up there, that would give you about $800 at expiration. Again, you will want to take this off very quickly once you hit the price target. So that is probably in a scalping sort of situation, or a very near-term trade, what I would recommend. Now that's a lot of capital to spend. If you wanted to do something that required less capital, a call debit spread is going to limit your profit potential, but also cost a lot less. So if you wanted to do something like a $10 wide, you want to make sure that your profit loss ratio right here is close to 1-to-1. This is very heavily skewed toward the loss side, so we want to move our strikes down. And what normally happens, you can see how this is getting closer to a 1-to-1. And what normally happens is you get very close to just being at the money. So let's see, and then we have our strikes start to go to $5 wide up here. But let's say you had a 565, 575. That's pretty close to a 1-to-1 profit loss ratio. If we go back to look at this, again, 571, it's not going to give you a huge profit, but 580, if you close right there, then that gives you your full max profit. So those are probably the two that I would recommend. If you want to try to play for a move up and a move down, Matt mentioned downside levels. You could probably do something like an iron condor, which would be short premium, even though we don't have a lot of IV there, a $10 wide put spread. And then if you went up to the target zone right around 580, let's do a $10 wide call spread. Over time, if you stay within that price range over the next 10 days, then your max profit would be about $280. Again, much greater max loss, but in exchange for that, you have a greater probability of profit. So that is the give and take with options. What do you think, Matt?
Yeah, I like all three of those that you put together. Obviously the first one is when you are in the midst of a directional move. Is it an optimal entry right now? I think we're in the later part of the move, but we're within the confines of a breakout, and we have not reached those targets yet. And in looking at the reason why we want to be more aggressive with the exit is because of the timing, as well, as we are now in the later part of the peaking phase. So what that means is that at some point here in the very near future, there's likely to be a peak that happens. And then there is going to be, it could be a sharp couple day, 3-day pullback, 2-3-day pullback. And we may come right back to, where we started from today. So if you are an options trader, it's why it's so important to know what type of strategy you're selecting, because if you don't want to be extremely active with your decision making, then as Katie described, you have to consider other less aggressive strategies that will take more advantage of the time situation rather than less. And when you have a single long call, right, Katie, you're
Yes,
still going
this
to be
is what I've
dealing.
got shown right here.
Right.
And so, Matt, if you were to place this call, obviously the ideal entry signal would be like a small pullback on the 15-minute chart. We had talked about this before the
Right.
show into the slim ribbon. We got that right
Correct.
before the show started. And then we had kind of this big move up again. So that would be something ideal. If you had this on, at what point would you take it off, Matt? Obviously, if you hit your price target, but on the
Right.
other side.
Sure. So on the other side, in terms of managing your risk, you always want to have some type of exit strategy. Now that can be based on, so Katie, let's take a look at if we were to violate or get below 563. So let's look at a risk reward sort of situation, reward risk. Let's look at in the next few days or so, let's say early next week, if we got to about 576 versus if we were to get to 563. So that's how I would sort of step myself through it.
Here's 576 right here with a long call at this price. Your profit at expiration would be about 488.
Okay.
If you got that move very
Earlier?
quickly, you'd actually have a greater profit.
Right. So,
because your theta won't have decayed yet.
Correct.
If you went down to 460, well, you're in the, max loss zone.
Yeah. So let's just, what I want to see is, let's say we gave it a few days, midweek next week, and it got, or Monday, Tuesday, you had asked about an exit, right? And so in terms of minimizing my loss, I'm looking at, say, 563. If it got below there, I'd close the trade. And just, and what would that give us in terms of a potential loss, not at expiration, but over the next couple of days?
Okay, let's see. We can pull over the analyze. And so obviously the next couple of days we'd have to go out to.
Sure, like the 14th or not the 14th. What would we be here? Let's talk
the
about
5th
like
is
this.
Monday, but let's say Wednesday.
Yeah, Wednesday.
Okay, so 563, you'd probably have about this is theoretical, of course, because we don't know what will have happened with implied volatilities and that kind of thing. But you could have around a $500 loss. If it was expiration, it would be much bigger. It would be around 700 something.
Sure. So around 500. And then if we were at around 577 on Wednesday.
577 on Wednesday, you're looking at a $600. So you're, approximately 1-to-1.
That's what we'd be looking for. So that would be my approach. I'd want to keep my win-loss ratio better than 1-to-1. And I also am eyeballing some key levels on the chart. And as a near-term trader, I don't want to let that get away from me at all. I mean, that's the whole point of being a near-term trader. You're looking at most likely either the 15-minute chart and the 2-hour chart. And looking at the 15-minute chart, that would be the approach. So 576 and 563.
Right. And again, of course, that will change depending on what call you have sold. If you go even further in the money, then,
right.
Obviously that's more expensive. You have a greater profit potential, but you also have greater risk.
All right. Now let's just think about one other hypothetical, Katie. Let's say that midweek next week, or even midweek or late next week, we get up into this 575, 576 area. And what I think is we might get into a range, right? So there's going to be some good support, most likely around 565. And then there's going to be some strong resistance. It could be, let's just say around 580. And that could be another, I want to look at a near-term strategy when that occurs, taking advantage of it getting into more of a choppy mode.
Okay, so if we're talking about being the date that being the 7th, would you still want to use the May 12th expiration cycle because you'd only have a couple days left to go? Or would you
Well,
go out like another week to the
I'd go out another
monthly?
week. Let's say like, can we see the
Go to the
expiration
monthly
cycle?
would be the
There we go.
16th.
Yeah, the
Okay.
16th looks good. And then I'd like to look at a couple, 585 is definitely going to be, I think some solid resistance. You have the
And
intermediate
interestingly, that is
78.6.
the expected move right now for that time period.
Okay. So let's take a look at that.
Okay, so this is the brown bar, the expected move, 580. It's right at 585 right now. Of course, obviously it'll move up if SPY moves up, and it will also change based on if implied volatility starts to increase or decrease. And you mentioned 565 on the downside. So when you're talking about options trades that take advantage of a range, a lot of times, that would be short premium trades such as, well, let me zoom out on this one. Oops, wrong way. Here we go. So this is a range trade, right? Where you're trying to keep in between these strikes. And this is basically skewed to the upside because here's where we're trading right now. And the middle of this range would be somewhere up here around the 575, 580 area. So this is a strangle. It's undefined risk. You get almost $1,000 in credit, but it requires a lot of capital put on, almost $13,000. So in order to mitigate that, you could turn it into an iron condor. Depends on how wide that you want to make it. You would buy further out of the money calls and puts. So if you've sold the 565 because you think that that will be a strong support, was that the number that you mentioned,
Yes.
Matt?
Yes.
Okay, then let's say hypothetically $10 wide, you're going to buy that put, and then 585, keeping it symmetrical, 595. So you collect $4.18, 418. That's your max profit. Then you have defined your risk. You can only lose 581 if it blows out either side of that.
Sure. Okay. So if we closed near expiration around that 565, it's still a winning trade, right?
Yep.
And if we close around 585, it's still a winning trade.
Yes, and it's a winning trade above this short put, below the short put by the amount of the credit collected. So if it was 420, that would be 560.80 would be your break even on the downside. So this area, that kind of this green area that starts sloping down where it meets the red, that's your break even point. It is the put minus the credit collected, and up here it's the call plus the credit collected.
Got it. Okay, very good. I think we covered a lot of different scenarios and put together some logical option strategies based on what the analysis is telling us. And the great thing is using this type of analysis, really you have a framework to think off of. You got to do your homework, but you have time, you have price, you have bias, the structure, and it's about patience, making sure that you're deploying what you feel is the most logical strategy at that time. And that's what we really wanted to talk about here, is that when you're looking at a single leg option strategy, that's going to be the most aggressive, and you really have to monitor that closely. And if you don't want to monitor things closely or have to make immediate decisions, which could be immediate, meaning or very near term, then you look at slightly less aggressive with those spreads. And then as you get into an area where, even though this is still bullish, so in no way is this pattern structure negative, but the reality is that we are entering into a cycle low timing window. So that means some volatility in terms of a range could start to happen here, where instead of just a linear move up to the upside, we could see it chop around as you get up into these higher zones. So I think we went through those really well. Katie, appreciate your review on those. All right. So unless there's any questions on those in the audience, we're happy to go over any of that thought process. If you come up with a question later, you can feel free to reach out to us on Discord. Katie has a a channel on Discord dedicated to option strategies, and you can connect with her on there. If you have any questions regarding the analysis that the team has done, you can reach out to any of us on Discord. RV has his set of channels, and I have channels as well. Okay, we're going to keep going, and we're going to wrap things up with a look at another segment here. In that segment, I'm going to go back to our agenda. We have a cycle low timing tracker. So this is a tool that the Ask Slim team has developed to help surface information around our cycle low timing window that we have. And you hear us talk about the cycle low timing window all of the time. And one of the unique aspects of cycle analysis is that we can project in time. So Katie's going to do a deep dive into our cycle low timing tracker, how to best utilize it and understand it. And then also, let's give some examples, Katie, around how you can use it to filter for directional decisions in terms of bullish or bearish setups.
All right, let me share my screen and let me know when you can see the cycle low timing tracker.
Got it. Yep.
Okay, great. So as Matt mentioned, it's a tool that we've developed to help our members identify opportunities that may exist around cycle timing windows in the intermediate and short-term timeframes. And this tool includes the 60 focus list equity and ETF symbols, as well as some, not all, of the futures and SPX, the indexes that Slim and RV cover in future speak. So we have three main categories. The first category is the cycle timing period of risk box. Symbols in this box are in the cycle timing window for either the weekly time frame in this first column or the daily time frame in the second column. Now, if a symbol happens to be in both weekly and daily cycle timing, those symbols are shown in bold font. And the reason that we do that is to call special attention to those symbols because they have imminent synced troughs in multiple time frames, and that's a situation that can bring lucrative opportunities. But again, this first category simply means that the symbol is in a cycle timing window when we expect the current cycle to form a trough and begin to move up into the rising phase of the next cycle. This category should be viewed completely separately from these others because the symbol will stay in this box until the cycle timing window is over, regardless of whether the symbol begins to move through these other categories. Okay, the next category is bottom pending. As a symbol begins to show signs of forming the anticipated trough, it may trigger our proprietary bottom pending algorithm. And once that algorithm is triggered, the symbol is placed into this category for whichever time frame that algorithm has been triggered, whether it's weekly or daily. The final category over here in the green box is bottom confirmed. So once enough evidence has accumulated reflecting that the trough has indeed formed, it will trigger our proprietary bottom confirmed algorithm. And once that algorithm has been triggered, the symbol will be moved from bottom pending over to bottom confirmed for whichever time frame the algorithm has been triggered again. So you cannot find a symbol in both bottom pending and bottom confirmed for the same time frame simultaneously. It will either be in one or the other. Remember that this first category over here, this red box, is separate from those others and simply means that a symbol is in the timing window. So it is possible for a symbol to be in this category and one of these others simultaneously. And an example would be something like Uber, which is inside the weekly cycle timing window, and it's also in bottom confirmed for the weekly time frame. Once the timing window is over, the symbol will disappear from this category. Now, these gray categories down here on the bottom represent uncertainty. The first category is for symbols that are either forming a late low outside the timing window, or they're possibly already breaking down very early in their new cycle. The second category over here is for symbols that appear to be forming an early low. Often it's a week or two before the timing window is due to begin. So it's uncertain whether the trough is actually forming early, or will there be another downside move inside that cycle timing window for the trough to form. And finally, the in sync box. This box represents symbols which are currently in daily cycles that correspond with the weekly cycle timing window. The end of the daily cycle fits within that weekly cycle timing window. So these symbols often show weakness or breakdowns in their daily cycles as those synced troughs form. So sometimes there are two daily cycles that are in sync with the weekly cycle timing window, and we don't know if the sync trough is going to come at the end of the first one or the second one. So if we start to get an indication that the trough came with the first cycle, then we put that information into a note that can be accessed by hovering over the exclamation mark next to the symbol. That's what happened with SPX. There were two daily cycles that had timing windows that fit inside that weekly cycle timing window, and we did not know whether the sync trough would come at the end of the first one or the second one. So it has now become clear that it came with the first cycle. So hovering over the exclamation mark will give you some information about that. One last feature of the cycle low timing tracker, you may have noticed these colored boxes after each symbol. So they represent a combination of momentum and cycle phasing conditions. The first box would be for the intermediate time frame. Notice that they are all still red. And the second box is for the short-term time frame. And you can see that most of those, with the exception of some of these down here in these uncertainty boxes, most of them are yellow or green. That is what we would expect to see because momentum shifts show up earlier on lower time frames. It takes a lot more to shift momentum on a longer time frame chart. So if you're looking at these symbols, you may have noticed quite a few semiconductor symbols on here: AMD, Broadcom, Micron, NVIDIA, even the semiconductor ETF, SMH is right here. We also have a lot of tech stocks: Apple, Google, Meta, Microsoft, Oracle. The tech sector ETF is on here, and even the NASDAQ itself. So all of these have weekly cycle troughs that are due. However, we are beginning to launch our investor service, which focuses on the monthly timeframe charts. And I can tell you that each of the symbols that I just mentioned are exhibiting negative momentum in the monthly timeframe. So as we get into the rising phases of the weekly cycles for these symbols, it will be important to see if they exhibit weakness, which is what negative monthly momentum would suggest, or if the symbols are able to get enough strength to shift that monthly momentum back to positive. So we'll be following that for our members. The other thing to note here is just the quantity of symbols that are on the chart or on this cycle low timing tracker. When you have very, very many symbols that are in these weekly columns, that suggests that a very important weekly trough is due. And the same thing when you start to become heavy in the daily column with a lot of symbols like we have right now. There's quite a few symbols that are expecting daily troughs. However, none of them have begun to move into bottom pending or bottom confirmed yet. So that says to me that a little bit of caution is warranted as we start to accumulate a volume of symbols in some of these columns that, especially when they have not begun to move up yet, that we may have some risk in the market. All right, Matt, do you have any questions that came through about the cycle low timing tracker?
I'm not seeing any.
Okay.
I did want to highlight something unless you had other.
No, go ahead.
Okay. You had mentioned, I thought, something interesting, which was Uber. So I'm just going to grab the screen
Sure.
really quick here. And there's a feature on our cycle low timing tracker. It's called View Historical. So you can go back in time and you can see where these symbols were at various times. And Katie manages this, and she manages this process every single day. And as I said in the beginning of the segment, when you're going through your own process to try to filter symbols for bullish and bearish setups, this is a incredibly helpful tool. So for example, she mentioned Uber. And if I pull over the chart of Uber, and if you look at this date, this was on 4/21. It went into the, or it was inside of the cycle timing window on 4/21. And then I'll pull the chart over in just a second. And then Katie indicated on 4/22, you can see here that a bottom pending on the weekly started to take shape. Now that's really, really important because since then, 4/22, this is where we were on 4/22. This is the daily chart, but I'm just zooming in on a daily chart so you can understand this progression and the value of it. Katie had indicated that there was a cycle low pending on the weekly. And from there, you can see this very strong, powerful up move that has taken place. So if you were filtering and if that caught your eye, you could come over then to the daily chart and you would see that the reversal scout was positive. You'd see that the slim ribbon had turned up. And this could be a cue that there was a move that was underway to likely test these key levels. And because we are in a new rising phase, the magnitude of the move that typically happens in a new intermediate rising phase is quite substantial. And overall, you can see from a broader perspective, and I don't have the monthly chart, and it would be interesting, Katie, maybe if we have a moment here. Do you have the monthly on Uber?
I do. Let's see.
Just like to see what that, there's the shape, you can see the shape of the pattern here. Really, there was probably not a huge amount of technical damage done, I'm not sure. But really what I wanted to focus on was the timing of the entry into the cycle low timing window in terms of bottom pending. So this is very, very helpful. This is the period of risk. This is high volatility period when symbols fall into here. They can go on your radar. But then once you move into a bottom pending, this is a great opportunity if you're looking for something on that is setting up that you're considering for more of a bullish opportunity. That these are great candidates because that would mean that you're in the midst of a new leg higher. Now, the opposite would be true for those symbols that are bearish. You'd want to look into the cycle timing period of risk window as soon as those symbols get in there. Then that would tell you that that's in a period of risk and that we're likely to make a low. And if you're a near-term trader or short-term trader, the magnitude of the moves typically are the strongest to the downside when you're into that period of risk. And then if you're looking for something on the long side, that's where you're paying attention to that opportunity to quickly shift where that money flow shifts back on the upside.
Okay, so I had the monthly chart of Uber up there. I can put it back up there, and you can see that Uber does not have a lot of monthly data just because it's a relatively new company. It only goes back, monthly data goes back to May of 2019, and I've only got 2 full cycles in here. So we're partway through the 3rd complete cycle, and we had negative momentum up until February. Then we got to shift back to positive momentum. We had tagged in April the 78.6% fib, but not a close below it, moved back up and now continuing higher. So the long-term 50% fib is just above. It was tagged early in the cycle. We have the retracement now moving back up towards that level, and that will be at about $86. And then the 61.8% is up at 93. And so that is certainly in play since we are almost at the 50% extension already. We are not expecting the monthly cycle to terminate until the end of next year. So quite a bit of time left for continued upside in here.
So if someone was more of an intermediate time frame or even position trader and wanted to look at, let's just talk about an option strategy or two here, Katie. And what I see, Katie, is a lot of support that is going to be around that 80 level because that's where it struggled to break out. And now that we've got that breakout, that could be, somewhere where, there's a lot of support. And is there a strategy that we could deploy, maybe a credit spread, a put spread? you know, around
For
there?
long-term strategies,
Or
assuming
will,
that you're willing to take the risk through,
let's
many
say a few
earnings
months.
cycles, yeah,
Well, let's just say a few months even.
you could do a poor man's covered call, which would be the purchase of a very deep in the money call, and then and that would be in a further dated expiration cycle, the back month, and then sell calls against that in the nearer dated expiration cycles, just to reduce your cost basis over and over.
Mm-hmm. Interesting. Okay. Okay. No, what's great is when you expand out or you zoom in on these various time frames, it really can help your perspective. So if you're a longer term trader, or I should say longer term position trader or investor, looking at that monthly chart, I think drastically changes the perspective. And you know, RV, you talk about this all the time in terms of the intermediate time frame, making sure that you keep that weekly time frame in front of you when you're looking to make some decisions too.
Right. Yep. Same. I mean, same overall concept, right? Just try to go up, zoom out in order to see
Right.
the actual signals, right?
Yep. Okay. All right. Well, that is going to complete today's Ask Slim trade planning live session with the analyst team, Slim's analyst team here. We appreciate everyone's attendance. We enjoyed the questions and the requests that came in. And don't forget that this weekend we'll end the cycle analysis workshop, $400 off, and then level 3 and 4 members get an extra $100 discount for $500 off. If you have any questions, you can write directly to me. You can find that special up on the top of the Ask Slim homepage. Other than that, thanks everyone for attending, and we'll see you soon.